Welcome back, folks. Doing some higher time frame analysis here on the euro. Now, the euro high time frame is just in a market maker buy model. Okay, so we have the original consolidation up here, up high, and you can see there are some very nice and juicy equal highs there. Okay, I do believe that is the draw on liquidity longer time frame. Okay, this is a monthly chart, so that could take years before we get there. But let's just break this down and look at what we can see. We can see that we have a nice reversal from the lows, and this is a very common 3-bar reversal pattern. Okay, now we do have a balanced price range from this move down and this move up. Okay, this is now a balanced price range, and right now this up candle is what's holding price on a monthly chart. Okay, so we shouldn't see any body candles close below that up green candle. This is very similar to what I showed you on a 1-minute chart where the market's dumping down and then we get a movement up, and then this is the breaking structure that I look for on a 1-minute chart. Okay, where once that green candle once we go back above that green candle, which is the last buy to sell. Okay, that's basically the manipulation prior to the dump, the little pump for the dump on a monthly chart. Once we get back above that level really should hold, and we should not get any body closures below the low of that candle. You can see how price on a monthly chart has been respecting the midpoint of that level. Okay, now I'll also show you where the best entry was, and that's on this 3-bar pattern that I talk about a lot in my trading on any time frame. Okay, you got a down candle. This is the wick. Okay, that's the manipulation. Okay, stop hunt taking liquidity on the left, and then the engulfment. That is the 3-bar pattern, and basically that puts us in a position in the market where we can look for price repricing to the upside. You can see this down movement is just a chop to fill in this fair value gap. Okay, so as I said, higher time frame, we are bullish on the euro. I do expect that we will take these equal highs. Okay, obviously monthly chart, as I've said, that may take years before we take that. Now, what's interesting and what gives this consolidation more importance is two things. One, notice that I've shown you that it is capped with this up candle. So this is institutional order flow. This is giving the opportunity for the institutions to take in long positions. So they've been accumulated for quite some time. This is more important when this aligns with the overall structure. So if I measure the range, okay, of that entire move, this consolidation is occurring at the midpoint of that entire range, which is where I expect the majority of the accumulation to occur. Okay, and so that's another sign, okay, that this is accumulation and we are headed higher. The immediate draw on liquidity, because I don't want to wait for years to come for this particular move. Okay, I want to take advantage of what I see now if there's an opportunity, okay, in the market. So right now the draw on liquidity will be this monthly high. We're pretty close to it already. So I'm going to jump down. Let's have a look at a weekly chart, see what the weekly is giving us. Okay, so on a weekly chart, there's this up candle. Okay, let's put a line there. In fact, what I'll do is I'll draw a midpoint at that level. So this is going to be a level. So this is basically a swing low, a swing high. Now, really, this is the swing low. Okay, so there hasn't been a lower low from this swing low. This is a high, but we haven't had a lower low. So typically what I would like to see, swing low, swing high, lower low, then a higher high, which is what we see here. That would become the bullish breaker. However, in this case, we don't have that. So that there is just going to be a mitigation block, okay, where the market maker that push price up, that's the manipulation for this move down. Now we've gone through it and they've got to come back down to mitigate, okay, offset, mitigate, offset, take off what they did to move the market up first before moving the market down. Okay, when I say mitigate, I don't really refer to the ICT concept of mitigation blocks, just offsetting their positions because they've bought, okay, to push the market up initially, then to bring it down, and now they've gone through there. And that needs to come back down to that level to give some opportunity to offset positions. Okay, now that is therefore important. I've also mentioned previously when you have this type of a bar and the market closes above, then that is the point of interest. Okay, but I think that, we need to possibly move a bit lower into the midpoint of that. I think more importantly, if we go back to a monthly chart, I think what's more important is going to be this bullish order block, okay? And so I'm going to put a horizontal line there, and I think that's where, maybe not that one, sorry, this one here, okay? That's where I want to look for this market to retrace into. So if we go into a weekly to that level, that's beneath this midpoint, okay? So we might not get there, I think we will, for a push from that level higher to take out the previous monthly high that I've shown you, which is a move probably around about 250 to 300 pips from this level. Okay, so let's also look at what we can see on a daily chart. Okay, so notice on the daily chart, that is the monthly bullish order block, that purple line. we do have this candle that I spoke about earlier, okay? And in a previous video, this type of a candle, which we have a close above, okay? So any movement now down into that high is going to hold price. And notice that is in confluence with the bullish order block on a monthly time frame, as well as this fair value gap on this daily time frame. So there's a few confluences there now that I'm liking, okay? Let's also now jump down into a 4-hourly chart, okay? And again, we can see that the bullish order block on that monthly chart is aligning with this down candle, this up move, okay? Again, we've closed above that level. So look, we're seeing the same patterns on different time frames, adding confluence to our decision-making process, and also this fair value gap, okay? So I'm liking that level, and that's what I'm going to be looking for. We also have equal lows, okay? And that's engineering liquidity for a potential move down, because the market always wants to generate liquidity in both directions. So they've taken these highs, okay? At the moment, on this 4-hourly chart, they've left some equal lows below, okay? And there is a level of inefficiency that needs to be rebalanced, okay? And then we have the monthly bullish order blocks and other ICT bullish signatures on other time frames that I mentioned on the daily chart. And I think, was there something on the weeklies as well? And on the weekly chart, we have this up move, but our entry is below that midpoint. Now notice also that on a weekly time frame, we've closed out in breakout in last weeks of trading. And so this market is currently out of balance. And to balance this market, we need to come back to the high of the last week, which is also the monthly bullish order block. So we have confluence on the monthly time frame, the weekly time frame, the daily time frame, and the 4-hourly time frame. We've seen that there's liquidity above and below. It's taken liquidity with Friday's trading on a 4-hourly chart. Okay, these highs have been taken. It's left liquidity to the downside, as well as inefficiency that the market needs to at some point come back down to rebalance the market on this 4-hourly chart. So a lot of things I can see here with confluence in our analysis. Obviously, nothing is guaranteed in the market, but we work with information that we have. We do our assessment that we have proven to ourselves works with historical price movements, and that's what we base our decisions on. Nobody knows the future, so we work on what we've learned from price action in the past, okay? So that's what I am looking for on the euro. I don't trade the euro, okay? So this is just me assessing the market as a normal ICT trader, how I would assess any market. That's what I see on this market. Now, if we look at that on a 4-hourly time frame, let's just measure this out. So if we are going to enter somewhere down here at these lows, monthly bullish order block, that's a potential move of 230 pips, but that's right to the monthly highs, okay? I think we'll push through those monthly highs. There is liquidity above. We have these highs as well as this fair value gap. So I think we will at least push up closer, somewhere in that zone. Okay, but ultimately, I think longer term, the euro is in a market maker buy model, and I think this is what it's reaching for. Okay, as I said, monthly chart, that is going to take possibly a number of years before we get up there. Okay, I think this consolidation is important. That's occurred at the midpoint of the range from that high to that low, as I've shown, there's a midpoint there somewhere, and that's where all this consolidation is occurring. We can see a number of indications on price action on the monthly chart to indicate that order flow is bullish. Okay, I've mentioned this 3-bar pattern reversal. Okay, I've mentioned this 3-bar pattern bullish indication. I've mentioned that price is held with this up candle. Okay, we've seen that if you draw a box around there, price is held at the midpoint of that up candle, which is basically the mitigation. Okay, so up to sell, we're back above there, and now it needs to mitigate what they've done to move the market up before moving it down. Now we're above there, so that level should hold as support. Don't want to see any monthly candle close below that low. That would void this setup that I am referring to. In fact, I really don't want to see the market, even go below this. Okay, it may wick down to stop. I don't think so. Wicks are okay. It's really the body candles. Okay, so I hope this is useful. Study this chart, monitor this market over the next couple of months, not just days or weeks, but months, and let's see how this works out. It might even take 2 or 3 years. Sure, we could get a few strong months and get up here sooner, but monthly chart, it's going to take a while for this to pan out, and we just have to monitor the charts. Hope the video is useful. I will now talk with you in a future video.